Ladies and gentlemen, good afternoon. It is my pleasure again to open this open dialogue with our distinguished guests. I will moderate today about the topic open dialogue, changing the paradigm of inclusive finance policy, the new role of the public sector in the microfinancing. Before we begin our panel discussion, allow me briefly to introduce myself. I'm the president of the Association of Microfinance Institutions in B&H, but also have the privilege to serve as a member of the board of the MFC for next 3 years. Thank you. Today on our panel, we will discuss how to explore governments moving beyond simple enabling regulation to become more active playing in supporting microfinance inclusion. We will discuss about the policies, institutional setups, and partnerships that policymakers can engage to create effective interventions. We will also analyze the European Commission's comprehensive approach to microfinance support, including the movement's support structure and the use of subsidies for long-term impact. Then we will shift focus on specific countries. We will hear about a recommendation on how the Bosnian can leverage the European Union framework for its own development and explore the unique model of public support for microfinance in Poland. Finally, we will hear about some new challenges. We will discuss how public policy can help microfinance institutions leverage digital tools, support micro businesses, adaptation to the climate changes and the evolving job market. We promise a discussion and reflection how government and MFI can work together to make financial inclusion really for all. Thank you. So I will appreciate if my guests come on and discuss with me, please. First of all, I would like to start with the woman, Mrs. Brigitte Felahi. She's a head of the Social and Inclusive Entrepreneurship in European Commission, DG Employ. Please, Mr. Brigitte, I would like to ask you to introduce yourself briefly.
Hello again. So my name is Brigitte Felahi-Brugno. I'm head of unit for social and inclusive entrepreneurship in DG Employment and Social Affairs in the European Commission. And our mission is to support the development of social economy through policy guidance and also through financial instruments. In particular now with the InvestEU social investment and skills window, which we steer and try to make the best use of it.
Thank you, Mrs. Brigitte. Next, please, Mr. Andrew McCartney, Financial Inclusion Specialist at the Asian Development Bank, Financial Sector Group. Mr. Andrew, I would be very grateful if you can also introduce yourself.
Okay, I'm Andrew McCartney. So I'm a financial sector specialist with Asia Development Bank. So we work across 48 countries currently. My role is basically to support the development of microfinance sectors across the different countries. So typically I work with governments, regulators at the policy level. We do a degree of policy-based lending, credit lines, grants, whatever needs to be done to move the needle. I currently have 3 big programs. One is in Uzbekistan, one is in Pakistan, and one is in Papua New Guinea. So it gives me quite a varied experience in terms of what's going on around the world in the microfinance space, but great to be here. Thank you.
Mr. Srđan Šuput, Director of the Banking Agency of Republika Srpska, Bosnia, is also today with us. Please, Mr. Srđan, can you tell us something about yourself?
Thank you. Good afternoon. And my name is Srđan Šuput. I'm Director of the Banking Agency Republic of Srpska, Bosnia and Herzegovina. Maybe just for the start, we have 2 agencies in Bosnia and Herzegovina, one in Federation Bosnia and Herzegovina and Republic of Srpska. I started my business and professional journey on 2001. I used to work in a banking sector I was the CEO of the bank for the 12 years, also working in insurance sector. Now I'm on the second side of the street as a director of the regulatory, so I'm really proud to be today here. But my best succeed in my life that I'm a father of 5 children, 3 sons and 2 daughters.
Thank you, Srdjan. Last but not the least, Mr.
And I stopped.
Mr. Pavel Koraji, Director General for European Funds and Development Cooperation at the Polish Development Bank. Thank you first of all, because we are in your country and you're supporting these distinguished guests and to have open discussion with everyone. So please, brief.
So, yeah, I am Paweł Chorąż. I am responsible for a portfolio of financial and blending and grant instruments implemented by the Polish Development Bank, coming from EU funds and also from the Polish public sources. Our portfolio is almost 9 billion euro from previous financial perspective and the new one, and the range of instruments is very diverse, starting from social enterprises, what you've just seen, through digital loans to micro, small, and medium enterprises, which is, I think, most of our activities. So we manage, as a fund manager, resources which are entrusted to us by national authorities, mostly ministry in charge of EU funds, but also Polish regions, including Małopolska, the region we are. The name Małopolska is for Cracow region.
Okay, thank you, Mr. Pavel. Thank you all for your impressive introduction. Now, if you agree, we can go further. I will sit with you here. So, Mr. Andrew, in the past, the public sector role in the microfinance was primarily limited on some sources enabling regulation. Do you believe there is a paradigm shifting happenings that the public sector is taking on more proactive role now in supporting financial inclusion? As we saw on the net before a few minutes ago, as on the Polish Development Bank also do it. If yes, take the following the shift. Can you highlight a few specific areas where policy and regulations can be most impactful in supporting inclusive finance in the current landscape? Can you elaborate us?
Sure, sure. And I do have some slides. I don't know if the slide guy's still with us. But okay, thank you. So what I'd like to do is just share a few insights from various parts of the world in terms of where we see. The short answer is yes, the public sector, the role that the public sector can play is changing, can change, and will continue to change over time to support microfinance. I think governments more and more now, rather than seeing sort of financial inclusion as a nice to have, are now seeing financial inclusion right in the mainstream as a key policy objective, particularly at the moment, post-COVID, to support job creation. And what you see in a number of, for example, in Central Asian countries, is governments even putting specific employment targets on the microfinance sector and institutions. So there's this sense, particularly given that the microfinance sector deals with the informal, and where in the past there's been a lot of focus on the formal enterprises. I think there's a growing realization that to ultimately create more jobs, we need to also embrace informal, and we particularly need to embrace a healthy and scaled up microfinance sector. You know, I've been working in financial inclusion now for the best part of 20 years. And I have to be honest, about 5-6 years ago, I was a part of the World Bank Group. We really thought we had microfinance sorted. We really thought it's done. We can move on to climate, other interesting things. But I think particularly given what happened with COVID, what we're seeing the world over is that a lot of the gains we've made in the last 10, 15 years have actually reversed. And part of my role within ADB, both internally and externally, is to continue the message is that we mustn't forget, climate's obviously critical and gender and lots of other things, but financial inclusion should remain a key area. And this is where I think governments have to be, they intervened during COVID, and you saw that actually in many countries, microfinance remained quite resilient right the way through. But the traditional role of the public sector has been obviously to support financial infrastructure, like the credit bureaus, collateral registries, and so on, and also to support a enabling regulatory environment whilst protecting the consumer. And beyond that, it was very much left to the market and private sector to reach out to the end beneficiaries. But what we see now is that there is an opportunity. There is still a big gap there in most markets. And as I say, I work in some fairly exotic parts of the world where the gap is a lot bigger than here within the EU, that's for sure. But one thing is clear is that there is still a big need to reposition the public sector, whether it be in terms of enabling regulation that promotes innovation whilst protecting the consumer, which is a delicate balance, and also addressing a lot of the underlying supply and demand barriers that are often in place and have been in place in the microfinance ecosystem. So typically, when we look at some of the constraints to a microfinance sector in a given market, you normally see a range, if not all, of the following 5. You see a microfinance sector that often struggles with sustainable funding, affordable funding, long-term funding, and often a fairly precarious relationship with the regulator, with investors, and also with the banking sector. And it's often the banking sector that shuns the non-banking sector to the detriment of microfinance. There's often also, and this relates to some of the regulatory aspects, a lack of capacity within the industry to commercialize and to move to what I'd call microfinance plus, where we're moving to not just credit, but full financial services. So in many markets, the microfinance sector often struggles to do payments. It often has to do a lot of its transactions through banks and other entities to be able to meet the needs of their clients. So this is often a big area. Now, I think because the microfinance sector has been, how should we say, humbled by some of this, it often leads to government schemes that are brought in by the politicians to create jobs, make noise, gain votes, whatever. And a lot of these schemes we find can effectively, well, first of all, distort the market. So big subsidies, reduced interest rates without warrant. And effectively, what we see is that often these large-scale programs are often unsustainable. They have often very high non-performing loans. And it has a substitution effect. It effectively crowds out the private sector. I think one of the other aspects that is about pricing, and I think this is really where the microfinance sector gets a lot of its bad reputation with regulators and others, where there's a lack of understanding as to why the end beneficiary pricing can be so high. And that's often generally related to high cost structures and obviously high cost of funding. And I think because there's often a low reach to the end beneficiary, particularly in rural areas, that has an added effect where you get a lot of microfinance focused in urban. And I think the last constraint, last but not least, on demand is low financial and digital literacy. We talk now in terms of digital inclusion, digital and the need. I mean, for example, when I'm working in Papua New Guinea, we have to get where mobile and internet penetration is very low outside the big urban centers. We talk about digital inclusion first before we talk about financial inclusion. And again, this is another area where we can redress it through the public sector. So what are the big areas that we see in terms of how the public sector can better support a more sustainable microfinance sector going forward? Well, the first thing is to deal with the funding issue. And what we see is a variety of mechanisms in place today, but the need to develop longer-term funding platforms that are able to blend both private and public sector funding, whilst also providing access to capital markets. In most of the markets that I operate in, at least, there is very little access for the microfinance sector into capital markets. The result is that they're reliant on either IFIs or expensive or non-existent commercial lending funding. There's often also state banks can also be repositioned to act like an apex with the right capacity building and support. And this is an area that we're working in a number of our markets where we select one or more state bank champions, build their capacity to wholesale lend to the microfinance sector. And again, this is another way in which a public sector bank can support the scale up of a healthy microfinance sector. The other area which I've heard a lot about today is on the digital side. And again, for many MFIs, their digital journey is still quite early, and the costs of entry can be very high. And so what we're seeing is also in various markets is a degree of public sector intervention to support the microfinance sector in their digital journey. So that can be, for example, in Pakistan, we're working with the microfinance sector and the Microfinance Association to develop a shared platform, effectively a core banking system that the entire microfinance sector, bar the very largest players that have their own systems, are able to utilize on a shared service pay-as-you-go basis. And this is a way in which we can rapidly move an entire microfinance sector onto end-to-end digital in a very short space of time. Other areas, I mean, in the Philippines, we've been working with cloud-based platforms also to move entire sectors into the digital space, which otherwise would take years. I think the other area is around telecoms and also mobile. When we do a lot of work on the women entrepreneurship space, the need to get mobile phones into the women's hands and using them with internet access becomes key. So another area of potential intervention here is to also work with, in partnership with also the telecoms industry, and provide programs that actually specifically put mobile phones into the hands of all adult population. Now, on the government scheme side, clearly the idea is we need to incentivize the industry in the right way, and as needed, also de-risk those parts of the market that the private sector does not want to or does not have the risk appetite to support. So in general, we would see the positioning of government-supported funding going more towards incentivizing and supporting the private sector to provide the end loans rather than do it directly. So particular areas like women, climate, youth, startups, early stage, etc., where typically there can be, for various reasons, a reticence and a lack of risk appetite. This is where the funding needs to be. Now, the regulator's key, and we all know that a prosperous microfinance sector requires the right regulatory environment and regulator. And again, here is where I think there needs to be a slight shift in focus for the regulators themselves to move more towards a market development role. Now, a lot of areas like regulatory sandboxes and so on, which are linked typically to regulators, are all about promoting innovation. But what we see is that, especially where markets are fairly nascent when it comes to microfinance, the need for the regulator to have a clear market development strategy and have a very clear role there in making it happen with clear targets becomes imperative. And that's a bit of a mindset shift for a lot of regulators in my experience. Now, last but not least, for us to scale up microfinance requires, whilst digital, of course, is key, I still believe that microfinance is also about the last mile access and people. And this is where we need continuing support in terms of capacity building and skills development across the industry, either through the regulator, through the association, or a combination. But this, again, is an area where the public sector can play a role, as well as also potentially creating new linkages with other parts of the market, like the banking sector. So hopefully that gives you an idea as to some of the areas where public sector intervention can happen.
Thank you, Mr. Andrew, for your insights. I think after this really special presentation, because of your knowledge and working experience in many countries, as you mentioned, give us the hope for the microfinancing, and still we have a lot to do and to work in the microfinance sector. A long-term funding platform, digital platforms, direct government funding, responsible regulation to support market development, capacity building program, all of these things. Thank you, Mr. Andrew. So, Mrs. Bridget, can you share with us your insights from the perspective of the European Commission support to the microfinancing in the European Union, including BDS and, of course, technical assistance, which we today talk a lot on this topic?
Yes, sure. Thanks a lot. Well, maybe first to frame a bit the support we give. I mean, for microfinance, I mean, we've been doing it already for quite a number of years now. But I would say that now we fit it into the larger framework of support to social economy, where we think that microfinance providers are clearly a part of this more general picture, where we want to have maybe different business model, different kind of economies that serves the people, and that is really oriented towards delivering on social goals as well, and inclusion. So within this framework, I mentioned yesterday, we adopted the Social Economy Action Plan, and there we have a number of actions which are very relevant for microfinance and entrepreneurship. No, social entrepreneurship, notably, I mentioned yesterday already, the YEPA, the Youth Entrepreneurship Policy Academy, which is really to help policymakers devise better policy making for entrepreneurship. So notably social entrepreneurship, but not just, for youth entrepreneurs. And obviously the Council recommendation for developing social economy framework conditions, which was agreed by the Council last November. And now member states are in the phase of devising strategies or updating their strategies for social economy. And one of the building blocks that was flagged is access to funding. And in terms of, and there are a number of building blocks, some horizontal, some more specific. and also a dimension on recommendation for administrative and institutional setup in the member states, and generally speaking, an invitation to invite all stakeholders in the debate to devise the strategy and the actions. So there again, I mean, a reminder to all of you to try to get to know what's happening in your member state and get involved, because things are really moving now, because they have this deadline for adopting the strategy by the end of next year. Then moving on more directly to the financing side, what we have in terms of financial instruments. So under this multi-annual financial framework from 2021-2027, we have mostly this new program, which is InvestEU, that groups all financial instruments that exist for the EU budget. And one of the windows, we call them, like we have 4 windows, one of them is for social investment and skills window, which has a 2.8 billion budget over 7 years, and where we are supporting notably microfinance and social entrepreneurship, but also skills, social infrastructure, so it's not just for microfinance. And it's a demand-driven instrument, which is also important to understand that we have negotiated with implementing partners. So for microfinance, mostly historically as well, the EIF, and now the ECEB, which is also helping with the deploying instruments for microfinance. We have devised products which are there, but then it's for the microfinance intermediaries to come and ask for all these funds which are available. We know they do, actually they do a lot. So it's not really a call for action, because actually we have more an issue of availability of funding, not yet, but we know, afraid it will happen before the end of 2027. Which means that the tool is addressing really a need, clearly in the markets as a big demand. To companies is really like, so those are basically what we provide mostly are guarantees, so to de-risk the activity of microfinance providers. And to companies that work as well, there is, as you just asked about technical assistance, we have what we call the advisory hub. The advisory hub is a central mechanism which has been created to support first us, I would say, with some kind of market analysis, for example, to understand the trends and the needs, but also very specifically for applicants, advisory support and capacity building measures. In particular for microfinance, we have set up what we call SIFTA, so social inclusive finance technical assistance, which is just really targeted to this microfinance networks. And it's meant to help them to get ready to several with their projects. So it includes training, it includes investment readiness preparations, it includes assessment as regards the ESG, for example. And very important, it includes also preparation to the code, to the award of the Code of Good Conduct for microcredits, which is a self-regulation tool which was created in Europe, like I think close to 15 years ago now, and has really become a quality label for microfinance institutions in terms of their processing recognition. I heard today that it was indeed very useful for some institutions to get recognition, including by their public authorities, as a quality label. And for accessing EU funds, it's even a prerequisite. So that's why we have this advisory support, which is here, to assess the entities and help them and advise, so that we make sure that, I mean, the idea is not to reject, it's more to help microfinance institutions be up to the standards that we expect, so that we can then provide EU funding. Beyond this, so InvestEU, which is now really the big building block for us, and it's really through financial instruments, so repayable finance. We still have on the side a bit of non-repayable finance, so grants, traditional, that we provide under the ESF Plus, European Social Fund Plus, and in particular the EASY strand, so employment and social innovation. For those of you, I understand many of you have been around the table for quite some years, so it used to be a program, now it's a strand under the ESF Plus. We used to have technical assistance, especially there. So this technical assistance has moved to the InvestEU advisory, but we have kept a number of grant projects that we manage. So like last year, we launched a call for transaction cost support. So that's not strictly speaking, technical assistance, but it's meant to help with a grant to reduce the cost of transactions for microfinance, because we know there are a lot of accompanying measures which are very costly. And this year we have just closed a supply and demand call. So the idea there being to help set up new instrument for social enterprise providers, finance providers, sorry, in member states where there is not so much developed in Europe yet. We have a few. So I'll really hear like it's seed money to help starting those schemes. And then, if I may say, like a bit like going further, there were a lot of discussions since yesterday on blended instruments, and that's actually also the direction we are taking. So we are piloting 2 blended instruments, one with EIF, one with CEB. The idea being so that we would combine some grants with the financial instrument that they manage for us, either to support more business development services for the microfinance institutions, or reduce transaction costs. So I mean, the same type of work we're doing, but now it will be blending all together available. So hopefully we hope that will help, and if it's going to be a nice pilot and we can expand later on.
Thank you, Mrs. Bridget, for your very open dialogue and explaining all to us how European Commission can support the microfinancing. And thank you for see the value of the microfinancing to the end clients. I believe that during these days on the conference you are very engaged by lots of users of this support. Thank you for that. Mr. Schuput. Building on the insights of our previous speakers, can you give us your view of the public support of the microfinancing from the perspective of the Bosnia and Herzegovina?
Thank you for the question, and it's really a pleasure to be here today on this panel with a great panelist today, because we heard from the first question a lot of things. First of all, I would like just shortly, in my few minutes that I have for this answer, to say about our financial sector in Bosnia and Herzegovina. Maybe the people who are sitting here, I know a lot of people who is coming from the Bosnia and Herzegovina and West Balkan, but I think it's very important just to see what is our financial sector is today. So we are mostly the banking sector. More than 90% of our financial sector is banks. We are the country that we have 2 regulators, as I mentioned in my first interactions. But the laws and the sub-laws are the 99% similar for the both entities. So if you are a financial institution in Bosnia and Herzegovina, you don't have the problem if you have your main branches and main business in our country. Is it in Banja Luka, Sarajevo, Mostar? This is maybe the town that you mostly heard about it. We have 21 banks, but when we are talking about the microfinance institution, we have 28. So the country with maybe, if I'm wrong, maybe somebody will interrupt, but we have 4 million people in our country. So 21 bank, 28 microfinance institutions. But each bank and each microfinance institutions work with a profit. So this is maybe the answer to the question, do we need to cut the numbers of banks and microfinance institutions or not? In Republic of Srpska, where I'm director of the regulatory, in this year we have one new microfinance institution, last year also one, and now we have some talks with a potential new one microfinance institution. So this is maybe just for the beginning, just to see what is the sector of financial sector in Bosnia and Herzegovina. Regarding the microfinance sector, because I used to work in a bank. Really, when I came in a regulatory body as a director, I wasn't satisfied with the laws, because we have the law from 2006 regarding microfinance institutions. So it is 18 years that we didn't change rapidly, that we didn't change some. Okay, we have some few changes, but this is maybe the answer of this question, how we are going in the future, what is changing in the West Balkan or what is changing in the EU. Regarding the microfinance sector in the Western Balkan, because we are the part of the Western Balkan, I must say that we have growing of the microfinance institution in Bosnia and Herzegovina, also in Montenegro, but we do not have the law and we do not have the microfinance institution in Serbia and Croatia. So this is, how to say, the same financial territory, and you can see how the governments of this country see the potential, or they don't want to see the potential of the microfinance sector. At the beginning of the microfinance life in Bosnia and Herzegovina, it was a negative, because everybody talk about the microfinance sector as the sector who is coming with the big interest rates to provide a big profit, to collect the profit, and to make a mess on a financial market. But in the last 2 years, as I'm sitting as the director of regulatory body, I must say that this is really the wrong perspective of the microfinance institutions, because it's very important that we have strong microfinance institutions for the country as Bosnia and Herzegovina, because the banking sector is too rigid, it's too risk. So as small and medium enterprises or the retail clients cannot get the loan in a bank, so if you do not have the good microfinance sector, you cannot have the economic growth of the country, you cannot have the GDP grow, and you cannot make any further steps for the revitalization of your economy. Why I'm saying that? Because in Bosnia and Herzegovina, each 2 or 3 years, we have some crisis. So from my beginning of my business life, we have the crisis in 2004, 2006, 2008, 2012, 2014, 2018, and 2022. So it is 7 or 8 crises in 15 years. And each of these crises, Bosnia and Herzegovina deal it by themselves. And we grow. So from my point of view, when we are, and I will finish with this, it's very important from the public role that we improve to encourage and to grow microfinance sector in our country, because it's very important. We saw that microfinance sector is very good organized, responsible organization. They are modern trends, want to be ESG responsible. Also, they want to be public and a social interest today. So it is important to keep on this track with the microfinance sector. From my position, I think that we will support as we can, because all laws coming from the governments, but certainly the governments have this kind of the feeling that it's very important to change something positively on this side.
Thank you, Mr. Šuput. You will agree with me. That's a good.
I always agree with you.
Thank you. That's good that we have this kind of discussion and different point of view from the different perspective, from the European Commission, from the knowledge of the lots of different countries, Asian countries, but also from the Europe side, but also the countries which are in the middle. Not on the east, but still not on the west. side. So
If
we
I can jump,
Yes, of
because
course.
I really want to say this presentation that Mr. Andrew present to us.
Yes.
It's the picture of the of microfinance market also in Bosnia and Herzegovina.
Yeah, globally.
So globally, so I think that all problems that we have and all open questions that we have, what you present, it's really great. And what is also really great that we have that we have this kind of from the European Commission that they recognize also the microfinance sector very important. So we have technical assistant, we have financial assistant also, and and what is very important that we have EU laws which open microfinance sector in Bosnia and Herzegovina more positive for the economy.
Thank you. Mr. Pavel, Poland microfinance sector, with its network loan funds relying heavily on the public support, present unique model compared to the European countries. Please, can you give us your insights about?
So maybe I start with some history, because when you look at Poland now, we are very proud that we made a great leap towards Western standards. But if you were in Poland like 30 years ago, we were almost bankrupt, externally indebted. So that was big problem in Poland in the 90s, with very weak financial sector. So, and with huge social and economic problems of the transformation in the early 90s. So what was interesting at that time, it is that many external donors, including international, multilateral international agencies or bilateral donors, and European Commission with pre-accession funds came with the idea of this bottom-up economic approach. So at that time started so many Polish regions, many Polish cities, many Polish authorities started establishing regional development agencies or public-private foundations which relied on capital provided by donors. So this is how Polish microfinance started. So what we have now, it is mostly non-banking institutions. So I represent a bank which is responsible for 90% of public support in microfinance, and mostly we work with non-banking financial institutions. So half of them are foundations, public or private. The second place is regional development agencies, either at regional or sub-regional level. Third place are associations. So it is quite unique, and what is also interesting, we operate outside big cities. So there are I have some data. So in Poland, according to the Polish Loan Associations, there are 155, if I remember well, microfinance institutions. So only 10 of them, they operate at national level. The rest, it is regional or sub-regional level. So the second factor for that are different publicly sponsored programs, either EU or national. Because and most of them, especially EU funds, they always target financial gap. So groups and enterprises which are not able to get a loan on the commercial basis. So it was another factor for development of our partners. because banks they were not interested in participating in this program. And the third point I would like to mention is the policy of our sponsors who entrusted money to the bank, because as a bank, as I have mentioned, we operate as a fund manager, so we do not implement by ourselves because the volume of financing is too low. So we always rely on cooperation with financial intermediaries. And when we look at criteria we use for public tendering, they are always agreed with our sponsors. So in many regions, there is a very conscious policy of authorities that we should differentiate the scene of potential providers from very small to let's say medium ones. So there is also I think there are some successes, and social enterprises, it is what we are especially proud of, but it is not only this scheme. And I think with the success of implementation, there are also some possibilities to experiment. So we have, and especially with EU funds, and now the regulatory base is improved. There is better room for combining grants and, for example, loan schemes to blend instruments. So there is an interest in Poland to experiment. And what is also big advantage, especially for regions, it is that when you use EU funds, after recycle it according to the EU rules, it becomes national money. So regions can follow and implement further for schemes they think they would like to implement according to their policies. So I would say that that from our point of view as a development bank, and specific role we play in the Polish financial ecosystem, it is very visible. Also for not only financing big strategic investments, but also go beyond that with our partners. And I would say that without working with these foundations, small operators, we wouldn't be able to reach out to the target groups, and also achieve objectives which are part of our contracts with bodies which entrusted our money. So I would say that just to finish, so we have root in very difficult economic situation and transformation which happened in Poland, and there is growing interest not only at national, but I would say even more at regional level to develop a network of institutions. There is a new, and it is last point I would like to raise. Polish region started creating some kind of BGKs at regional level, which would also use money which are at disposal of regional governments to implement small-scale programs with a network which is already developed.
Thank you, Mr. Pavel. So, changes are possible, and we need them. Before 30 years ago, now you was on the beginning, and now you support the smaller ones, and you reach the biggest impact, as I can see, supported by the European Commission, of course, and other friends. So, congratulations. Thank you for all of these answers. If I can ask now to the audience to participate, and please, can we have the first slide, Paul? Please, can you answer the questions? Is it possible? Yes. In your country, what direction do you believe public policy of microfinance should take? Yeah, different mathematics, but different point of view. Dialogue is always very good, even if we have a different point of view. So let's go further. We don't have so much time, so please, if it is possible, for very brief answers. Mrs. Bridget, what role of the European Union microfinance initiative plays in facilitating the adoption of the digital technology and to improve, of course, financial inclusion?
Okay, so to make it brief, I want to go back on all the discussions we had on what could be the benefits of digitalization for microfinance, for the institutions and for the customers. Maybe what I would like to highlight a bit, and it appears also from the survey that the MFC carried out on this digitalization issue. Some of the major challenges that were flagged were about cost and also lack of trust and lack of standards for digitalization that appeared. So there I would just like to flag, some initiatives which are taken first at policy and even regulatory level by the EU. By our colleagues from DG FISMA. So they have tabled a proposal on open finance, which was mentioned in some previous workshop. And the idea is to increase the customer's trust, clarify the legal framework, and develop technical interfaces and data standards. In our European context, where we are very sensitive to data privacy, GDPR, so to make sure that this can happen in a safe legal environment, and that also European citizens will feel comfortable with this digitalization. Another issue that popped up a lot during this day is about literacy, both financial and digital literacy. So actually, I happened to see yesterday the Council adopted Council conclusions on financial literacy. So it's really timely. And the idea is to encourage member states, again, to adopt national strategies and competent framework to develop financial literacy through, usual measures you can adopt, like awareness raising, best sharing practices, but also concrete recommendations to promote financial literacy in education and long life learning systems. So I think it's very, very timely that this happens, and it's a clear message. So it's Council conclusion, it's not compulsory, but it's something all member states just agreed on at Council level, so it's important that there is awareness there and there is a willingness to improve. On the digital skills, then coming back also to practical tools, of course, we have again the European Social Fund, which, part of the actions that we could support under this MFF is to support basic digital skills. And it has been adopted and put in place in a number of member states. So it's not necessarily linked to finance, but it's really because we see that the basic digital skills are missing for a number of our citizens. Maybe not the youngest, as was mentioned earlier, but maybe the eldest or also the most disadvantaged group. We need to work on that. Then focusing more on microfinance. So there again to mention, so CIFTAS, this technical assistance I was mentioning under InvestEU, includes, so it's about non-financial support, and it's about non-financial support services, but we do support, again, the digital transition of the financial intermediaries through exchange of best practices, capacity building, and tailored trainings as well. So this is a kind of really to help the intermediaries with their digital transition. And on the funding side itself, it was mentioned earlier as well by the colleague from the EIF. We also have a tool, which is the capacity building investment product provided by the EIF under InvestEU, which there is really with providing subordinated loans to help intermediaries with their digital transition. So this is important. And then maybe, again, in zooming out a bit with the social economy action plan, the twin transition, as we say, green and digital, obviously is really important. And there also, I mean, just to flag some work which is done by our colleagues in DG Grow about the transition pathways they have established. Note that the social economy is one of the 14 industrial ecosystems which have been identified in the EU. For each ecosystem, they have devised it's been a bottom-up process really discussed, transition pathways, identifying actions that could be taken to help stakeholders in the ecosystem with their green and their digital transition. And so it's going on, and what they are now doing, our colleagues, is a platform will be online this summer. So it will allow all stakeholders who made pledges about, I commit to train how many people and this kind of stuff. So to exchange best practices, they will be allowed to be in contact, for which was a request, because so far people pledged, but they were like, okay, we pledge. So now they will be able to exchange with all other stakeholders involved in the process.
Okay, thank you. Thank you so much. Mr. Šuput and Mr. Pavel, can you give me your opinion about this important topic which we discuss, digital transformation, climate exchange, and the future of the work of our workers in microfinance sector?
I really don't know what is the future of... but certainly I will just say maybe 2 or 3 things that I think it's very important for the environment that we are working in Bosnia and Herzegovina. First, it's a regulatory role. I think it's very important to have a very active role to change our regulatory laws and sub-laws regarding the changing of situation on the market that microfinance institution is developed in Bosnia and Herzegovina. I will just say again, we have the law from 2006, today is 2024. A lot of things is changed and we need to change. We heard now from the EU perspective what is going to change, and now when we see what is the situation in Bosnia and Herzegovina, we certainly need to change a lot of things. The second we are talking about, and your question is talking about the digital transformation, but it's very important, and I always speak when I have the opportunity to speak, not only for the microfinance institution, also for the banking sector. We need to do more on a financial education of our clients. It's very important to have financially educated clients if you want to sell some products to them, because if you don't want to have the problem in 6 months or 1 year with your clients, you need to educate them. So the public sectors, the governments, also the banking agency, but the actors on our market, it's the banks, the microfinance institution, leasing companies, all need to do this. The digital transformation is not going to come, it's already come in our country also, because you have the new generation of the people, what we saw on the slides at the beginning of this panel, because everybody want to finish all kind of the job today with a mobile or with your laptop or iPad. So you don't want to go in a branches anymore, you don't want to lose a lot of time, you don't want to lose your energy of the signing the papers, etc., etc. And the last but not the least, it's very important also to make that the public sector make environment for the all financial institutions in one country, that you can get funding on the stock market. Is it local? Is it abroad? But because there is a lot of money which is sitting in a bank's account and doing nothing. And there is a big potential of economy in Bosnia and Herzegovina that need that money. Okay, today we heard that last year and maybe 2 years before the money is not anymore cheap. But from my point of view, today maybe the interest rate is high, but it will come in the next year, maybe 2026, that we are going to speak about the really low interest rates. So you need to collect the money, you need to make good projects, and you must develop the economy of the country.
So, from our audience, there is lots of from the Western Balkan countries,
Yes.
from the Bosnia. So they will write that you tell us that you will harmonize the law with the European Union. You support digitalization completely, as I understand.
Of course,
And last but not the least, the European Commission probably will support us somehow with some additional help so that we can inline interest rate with lots of different funds, technical support and everything to support our clients.
In our
Thank you.
complicated country as Bosnia and Herzegovina, certainly we will do that because we are really see EU as, and we see Bosnia as a part of EU. So if you want to develop new business in EU, you must have that.
Thank you, thank you. Mr. Pavel, from perspective of the Polish Development Bank.
So maybe on the product side. So what we observe that publicly sponsored programs, they become more and more complex and demanding also from our for our partners, because if we go green, if we go digital, it requires not only knowledge on the financial side, but for example, for green, there is a lot of different regulatory aspects which you must take into account once providing financing to the client. So this is an area of cooperation on our side as a fund manager with our partners. So we see that it's becoming for financial intermediaries, especially for the smaller ones, quite a big issue. So I have started preaching them some years ago that you should become green, because if you are not green, you won't survive in 10 years, because we do not provide small and simple financing as a product for you coming from the public sources. So Poland has an excellent banking system in terms of digital access, which is not the case for non-banking financial institutions. So here we see a lot of challenges in terms of contacts, in terms of contact with clients, also capacity to use data, because there is a lot of potential here. But on the other hand, I would like to emphasize that we should. So what is very at the heart of microfinance is the proximity and direct contact to the client. So it is not that we should become only online and 24 hours, but without human touch. So we see a lot of. So it is really significant.
So you can recommend to all of combining digital and on-site with the client discussion.
So digital does not substitute human.
Yes, thank you. Thank you for this vulnerable insights from the Polish Development Bank. So, my dear guests, thank you. Thank you for this discussion, open discussion from a different point of view. So, as we can see, we need still to build ecosystem which works for the client, for inclusive finance, and the end of the story for the microfinance client. But still, we have a lot to do in the microfinance sector and business. Thank you.